Good afternoon, everyone. My name is Madhusudan and I welcome you to the 8th lecture of N100 series. In this series, we are discussing all the topics from the mains perspective. We shall be covering the complete polity syllabus, both static as well as the current affair part, strictly from the mains perspective. And in this series, we are discussing the federal structure. In the last class, we have discussed the legislative and executive aspect of federal structure. We shall start from there only. Good afternoon, Yogesh. Just confirm if audio, video, everything is clear. We shall continue in this lecture from where we had left. And then we shall move on to the financial relationship and then towards the part of asymmetric federalism that we have. From this, we shall build up in the next class the cooperative, competitive and combative federalism and the suggestions that could be there for improving the center-state relations. Okay, so let's start it. And first, we are going to see the legislative domain as we have seen in the last class that we have dual polity. And in dual polity, they both center and state have their own legislature. They have their own division of power. In some field, a center can make laws. In some field, a state can make laws. Where are these listed? Can you tell me where do we find the items which are listed, that on which item or on which subject matter center can make law and on which subject matter state can make laws? Please reply. This is a very easy question. It is mentioned in 7th schedule. Yes, it is mentioned in 7th schedule and the article that refers to 7th schedule is 246. Just I mean, for the sake of memorization, you can remember it like before 7 all are even number, 2, 4, 6 that are leading to 7. Okay, so now we start in today's class we are going to see some of the principles that Supreme Court have time and again used whenever there is a dispute between the jurisdiction of the center and the jurisdiction of the state. Whenever there is a dispute that whether center can make a law or a state can make a law, or when the laws made by center and state have been found contradictory, or when someone has raised an issue that the laws made by a state, usually the issues are made with respect to a state, that the laws made by a state are not null and void. Okay, so the first principle that we are going to see is doctrine of occupied field. As the name suggests, occupied field means the field is already occupied. So it simply says that if on a particular field both center and state have the jurisdiction, where both center and state will have jurisdiction, can you tell me? So this doctrine is saying that if both center and state have a jurisdiction on a particular field to make law and center has made a law, the union government has made a law, then the field would be considered occupied and the state cannot make any law contradictory to the law made by center. Is it clear? Because center has occupied a field, suppose the field is education. If center has made a law, Right to Education Act, now the field is occupied. On the same matter, on the same item, now a state cannot make a law. If a state makes any law which is different, I mean, a state can make a law which says the same thing, it will not matter. But if the state says anything which is different from the law made by center, that law would be struck down. And this would be the situation in case of concurrent list, because in concurrent list both center and state both have jurisdiction. Since both have jurisdiction, if center has made a law, a state cannot make a law contradictory to this. Or rather, but if center has not made a law, then states can make their law. So when the union legislates on a subject, it occupies that legislative field. Any law contradictory to the law made by center would be null and void. Clear? Similar is another doctrine that says the principle of federal supremacy. This is also saying the same thing, that in case the two laws made by center and state are contradictory to each other and both are competent to make that law. See, first thing that will happen is when one is competent and another is not competent. Suppose the law is on a state list, then these principles are not applicable. In that case, obviously, since it is a state list, a state law would prevail and center law would be null and void. If it is on union list, union law will prevail, a state law will be null and void. Suppose both have competency to act, to make a law, and the laws are contradictory to each other. In that case, because of the principle of federal supremacy, the union law will supersede. Okay, there is supremacy of the central government over state government in case of legislative conflict. Can you tell me one of the article in our constitution that says that in case there is any conflict, the union law will remain in force and the state law would be null and void? Yogesh is saying that in case union make a law on which a state already make a law, I'm not able to see the complete chat. Can you make a little adjustment towards the right side? Yeah. So Yogesh has a doubt that in case union make a law on which a state already made a law, what will happen in that case? In that case, this principle of federal supremacy will come into play and the union law will survive and a state law will not survive, except one circumstances like we have studied yesterday, article 254, which says that in case of disagreement the center law will prevail. At the same time, we have also seen that in case a state law get assent from president, a state law is reserved for president assent. President, I am saying, normally a state law will get the assent from governor, but in case it is reserved for president assent and then it gets assent from the president, in that case for that particular state, that state law would prevail. Okay, so suppose union had made a law, then a state is also making a law. If both are contradictory, union law will prevail. The only way a state law can survive is that a state law get the assent of president. Then for that particular state, the state law will prevail. Is it clear? Next is principle of harmonious construction. This is a principle given that, see, as and when there is a dispute between a law made by center and a state, the first approach of the court should not be to struck down the state law. Normally, the law made by a state would be struck down, okay, or to struck down the law made by union. Okay, sometimes it may happen that you will try to decide that which of the two has exceeded their jurisdiction, whether the matter falls in the state competency or in the union competency. Okay, so the approach the court will take is that court, if at all it is possible that the law, I mean both the laws, can be given multiple interpretation, that interpretation would be taken into account, which will allow both the laws to survive. If it is possible that the law can be given multiple interpretation, the laws would be interpreted so that both are in harmony. So the law would be constructed in such a way that they live in harmony, both could survive. Okay, so the court would not try to struck down. The first approach of the court would not be to struck down. Okay, the conflict between provisions of two different statutes or two sections of same statute should be harmoniously constructed. Harmoniously constructed means they should be constructed in such a way that they survive. They would not be interpreted as per their dictionary meaning or as per their strict legal sense. Rather, they would be interpreted in such a way so that both can survive. Okay, this principle of harmonious construction is also used when there is a debate between fundamental right and DPSP. Suppose a law has been made to implement a DPSP and someone is questioning that it is violating a fundamental right. It would be interpreted in such a way so that the fundamental rights are not violated, if possible. If it is possible of multiple interpretation in that case. If it is not possible, then the courts are bound to implement the fundamental rights except the exceptions that we have studied. Okay, and the law would be struck down. Next is doctrine of territorial nexus. Now again, this is also this is mostly applicable for uh, state laws, because as we have seen that state legislature can make only laws for their own territory, whereas parliament can have an extraterritorial law. So in case of parliament, the question will never arise that it has made a law which is extending the jurisdiction of it Indian territory, because constitution clearly writes. But the states cannot make a law which have extraterritorial jurisdiction. So often a question is raised that you have made a law which is having extraterritorial nexus, which is having impact on the outside people of the state as well. So for that purpose, people have often went to the court and said that the law should be struck down. Okay, but the court has said that in case there is a nexus between the things or the subject that are being regulated with the territory in which the legislature has the competence to legislate. For example, Bihar legislature has a competence to make a law for the territory of Bihar, but suppose it is regulating a subject which is outside the territory of Bihar, but it has a nexus or relationship with the territory of Bihar. In that case, it can be considered valid. A very good example of this, when I give the example, probably it would be more clear. Extraterritorial legislation is valid if a sufficient and real connection exists between the subject of the legislation and the territory that enacts it. Territory means the state government or the state legislature that make a law, and the subject, obviously law will govern certain item. That item might fall outside the territory of that state, still it can be considered valid if there is a sufficient and real connection. For example, Gujarat, this is a real example. Gujarat government made a law that like this was the land ceiling act only, that to decide upon the land ceiling, the land that a person possesses outside Gujarat shall also be taken into account. For example, suppose the limit is 100 acre. Now in Gujarat, I have 90 acre. In Maharashtra, I might have, okay, I don't have, so someone might have. So someone has say further 90 acre. In say Uttar Pradesh, he has further 90 acre. So in totality, he has 270 acre, but neither his he is in the limit of land ceiling in Gujarat, nor in the Maharashtra, nor in the Uttar Pradesh. So the Gujarat government had made a law that to decide upon you whether you have exceeded your land ceiling or not, the total land possessed by the person in throughout the territory of India would be taken into consideration. Now people went to the Supreme Court and said that the Gujarat government does not have the jurisdiction, or the Gujarat legislature cannot enact a law that will take into account the property owned by a person outside Gujarat. So the Supreme Court said that no, there is a doctrine, there is a territorial nexus. The subject belongs to Gujarat, and the land which is owned by that person even outside Gujarat can be taken into consideration for calculating the total land owned by the person. Okay, is it clear? or if you have any doubt, please ask. You must take down this legislation. Suppose a question asks, the first you have to explain this doctrine. You might have to compare, if there are more than one doctrine in a question, you might have to compare the two doctrines, and you must give the example also. Okay, you may give a theoretical example or a real example. If you know the real example, that is always better. If you don't know a real example, you can have a theoretical one as well. And one more thing, like in current affair, when you study any such thing that happens in that comes to news, you must keep an eye that yes, this doctrine has been applied, this doctrine has been applied, and so on. Okay, chalo. Now let's move to the next doctrine. Next principle is doctrine of pith and substance. This says that, see, when the court is deciding whether a legislature had made a law within his jurisdiction or outside his jurisdiction, the core of that law would be considered. For example, the core, like the farm bills, this was something which would have come into picture in case of farm bill. That the core of the farm bill were related to the agriculture, and agriculture is in the domain of a state list. So that's why people were arguing that as per this doctrine, the center does not have the jurisdiction to make those laws. Although Supreme Court did not rule on it before, Supreme Court could have ruled, the center withdrew those three legislation. But in such cases, this doctrine comes into picture. The court shall look at the true nature and essence of a law rather than its incidental or peripheral aspect. And this is more often used by court to justify an act. Okay, for example, like uh, see, on agriculture, the state have the jurisdiction to make a law. Suppose a state legislature make a law and it decides to impose some kind of income tax. Okay, although it is explicitly written in our constitution that agriculture income would not fall in the part of income tax, but suppose it has some effect on the income of a person. But since the act is made on agriculture, agriculture is a subject which is there in the state list. As per doctrine of pith and substance, the act would be considered valid, even though it has marginal impact on income, which is, or income tax, which is a part of center legislation. So even if its peripheral aspect lies elsewhere, lies or goes into the domain of center, or center's law goes into the domain of a state, the law would be considered valid as per the doctrine of pith and substance. Okay. Next is doctrine of colorable legislation. This simply says that you cannot color a legislation. What you are not allowed to do directly, you can't do it indirectly. This is also a doctrine which might have been useful in case of farm laws, because see, on agriculture, union was not allowed to legislate directly. Now, if you are not allowed to do it directly, in the name of regulating the essential commodities, or in the name of regulating the multi-state marketings of agriculture produce, you cannot legislate on agriculture. So what you can't do directly can't be done indirectly either. Okay, so this is where on the basis of doctrine of colorable legislation, a legislation can be declared invalid. Next is doctrine of incidental and ancillary power. Okay, so suppose the union government have been given the power to collect income tax. Now, obviously, there would be few people who will not be willing to pay income tax. For that purpose, the government would require to use power. Maybe the government would require to take certain property in its possession, to have someone in custody, to arrest someone. Now, this might prima facie look that to arrest a person or uh, to dispose of certain property is a matter of law and order, which is a state subject. But as per this doctrine, the doctrine says that if you have to do something, to do that particular thing, you might require certain ancillary and incidental power, and you will always have those powers as well. It cannot be said that whatever the others incidental and ancillary power required to do the duty is not possessed by the government. Okay. So the power to legislate on a subject includes the power to legislate on matters that are incidental or ancillary to that subject. Okay, so incidental and ancillary you can simply understand, which are related, which are dependent on that particular subject. So like the matters related on income tax calculation is to impose penalty, to arrest a particular person, to seize the property. So these incidental powers are also automatically gained by the legislature as soon as it has the power to tax income. Okay. So these are the 7 doctrines. These are the 7 important doctrines. There are other doctrines as well, but I expect that if a question is to come, question would come on any of these. If you have any doubt with respect to any of the doctrine, any confusion, you must ask now. Okay, so now we shall move to from legislative relation to financial relation part. Okay. Now, in case of financial federalism, there are certain things that are simple things that you must be knowing. The first thing is that the center has more financial power. This is another aspect which can be cited as an example that how fiscal, in case of fiscal space, there is a central bias because all the important matters of taxation are there in the union list. The state list have very less amount of matters of taxation, and the concurrent list does not have any item of taxation. Okay, so first and foremost thing, yeah, I will come to this part later on. So first and foremost thing is that important taxation matters are there in union list. The second important thing here is that because of this, states are dependent on center for finances. The states are dependent on center for finances, and this is something that the constitution makers had also realized. So they made a mechanism of a body called finance commission. This body would be constituted every 5 years. Okay, who will constitute this body? President. So president will constitute a body called finance commission every 5 years. What it will do? It will do two things. It will do vertical devolution and horizontal devolution of taxes collected by center. Okay, so the taxes that are collected by the center. So first is to be decided is vertical devolution. Vertical devolution means between center at one level and then states at another level. So obviously center also needs some money. It's not that whatever the tax that is being collected by center has to go to the states. So how much money would be kept by center and how much money would go to the states? This is called vertical devolution. Okay, like if 100 rupees collected, how much will be kept by center, how much will be going to the states? And next is that obviously now we have decided that see out of the 100 rupees, 40 rupees will go to the states. Now these 40 rupees have to be distributed among 29 states, sorry 28 states. Now these 28 states, they are not all equal. Some are big states, some are small states, some are very small states. Their population is different, their development level is different, their area is different. So we cannot simply say that okay, all 40 of all 28 of you will divide this rupees 40 in equal amount. So we need to have a formula that how this 40 rupee is further going to be distributed among 28 states. This is called horizontal devolution. So the distribution among the states is called horizontal devolution. So this is the responsibility of Finance Commission. Finance Commission gives its recommendation to President, and then it's up to, again there is a question which is often asked in the prelims exam, that whether the recommendation of Finance Commission is binding. As such, recommendations means recommendation. It's your suggestions, your advice. It is never binding. But usually in case of Finance Commission, because see, if you do not accept the advice given by Finance Commission, all the 28 states are going to be angry with you. So usually, normally, central government has accepted the advices given by Finance Commission. There have been 15 Finance Commission that have been constituted so far. Um the 16th Finance Commission is also has been constituted, but we have got the report of 15th Finance Commission till now. The latest report is of 15th Finance Commission, so we shall study about the 15th Finance Commission in a little more detail. Okay, one more thing here that you must keep in mind is that the taxes which are devolved between center and state. So the taxes, uh, they there are three terms that are used here with respect to taxes. One is levied or levy, second is collection, and third is appropriation. With respect to taxes, these are the three terms which are used in our constitution that we need to understand. Levy means who imposes the tax, whether it is a central government that imposes a tax. Collection means physical collection, who will collect the tax. Appropriation means who will get to spend this money, who will keep this money. Okay. So these are the three terms that you will come across in our constitution: tax levied by center, collected by center, appropriated by a state. Okay. So there is first possibility, there are various taxes which are levied by a state, collected by a state, and appropriated by a state. Can you give some example? Which are the taxes which are levied, collected, and appropriated by a state? For example, earlier there used to be sales tax. Now they are calling it as VAT. Okay, so VAT falls in this category. I will just clean the board. So its example would be VAT, value added tax, sales tax. Okay. But there would be a few taxes which would be levied by center but collected and appropriated by states. In this category, like the tax which will come is a stamp duty. There are a few which are levied by center, collected by center, but they are given to the states. This would be the taxes which are in the nature of interstate goods, like newspaper advertisements, the taxes on newspaper advertisements. So these are the taxes which are levied by the center. Since they are interstate in nature, they are collected by the center also, but they are appropriated by states. The fourth is levied by center, collected by center, and appropriated by center as well as states. They are distributed among center and state. In this category comes the income tax, corporate tax, CGST. So this is something which is distributed among center and state. When we are talking about this finance commission, we are referring to this category of taxes. Finance commission comes into picture for them. The tax money which is going directly to the states is not being bothered by finance commission. But then there are certain category which are collected, levied and kept by center itself. They include cess and surcharge. So cess and surcharge, what I have written in the bottom is surcharge. Okay. So cess and surcharge are not shared by center with states, like education cess, Krishi Kalyan cess, there are various Swachh Bharat cess. So all these cess amount are kept by center only. It is not shared with the states. Okay, is it clear? Is there any confusion? You may ask. Those of you who will be watching this video later on, maybe in a recorded format, you may also ask your doubts by uh, through your comments on the video. Okay, and definitely I shall answer to your comments. Each and every comment on my video shall be addressed. You will get a detailed answer to whatever question that you raise. Okay, very good. Saisri, it seems you are attending my class for the first time. So, are you liking it? In case you have missed the earlier classes, those are there in the playlist on our YouTube channel. So, you must watch those classes as well. Now, let's move to the next item is that this 15th Finance Commission have given its recommendation. So what are the criteria that have been used by 15th Finance Commission? Now the criteria that we are saying is for horizontal devolution, for distribution of money among states. Now the first thing first is, what about the vertical devolution? So vertical devolution is that the 14th Finance Commission has said that 42% of the net proceed of taxes collected by center must go to the states. Okay. Now 15th Finance Commission said that it should be 41%. Now 2-3 things here that you need to understand. What is this net proceed of taxes? Till now I was saying that the taxes collected. Now I am using the word net proceed. So the constitution says that, see, uh, since in let's take the example of income tax only. To collect income tax, there is an expenditure which is to be incurred by the center. For example, like some of you might become an revenue service officer, so your salary will also be counted towards the collection of taxes. So when you are distributing the money between center and state, you should subtract this cost of tax collection. So net proceed means the total tax collection minus cost of tax collection. Like some court cases would be there would be expenditure on advocates, there is office expenditure, there is a digital portal through which people file taxes, there is expenditure on that as well. So there are various expenditure that the government has to undertake. There is awareness campaign, etc. So these amount would be reduced. This is called net proceed. 42% of this net proceed would be shared to the states. Rest 58% would be kept by center. Okay. Now this 15th Finance Commission has reduced it to 41%. The logic is simply that now Jammu and Kashmir is an union territory. Okay, so the expenditure to Jammu and Kashmir would be from the kitty of center only. For union territories, they do not get part of using this formula. They get donation, rather grant from the central government as part of central government expenditure. Their expenditure is counted in central government expenditure only. Okay, so now that there is one less state, so their share has been removed from here. So effectively, in terms of vertical devolution, what you will write in the answer, that probably the share of states have been kept unchanged with respect to 14th commission and 15th commission. Now this question is very often asked, what changes have been made? Two questions can be asked. One question could be, now that we have 15th finance commission recommendation, the question could be simple, that what are the criteria used by 15th finance commission? The second question that can be asked is, what are the changes in the criteria used by 15th Finance Commission? Okay, so one with respect to vertical devolution we have said, now with respect to horizontal devolution. The first is income distance. Now you also need to understand each and every criteria. Sometimes it happens that there is a 15 marks question and they are simply asking about the criteria. So there you will also, what will you write? So what you will write is, you will explain these criteria as well, that what is this income distance and all those things. Okay. So income distance is simply the per capita income, or rather the difference of per capita income of a state with respect to a state with highest per capita income. So there would be one particular state which has the highest per capita income in our country. All other states are going to have less per capita income. So which, when you are considering, for example, when you are considering for Bihar, okay, let's say that the Goa has the highest per capita income, or probably it is Haryana. I don't know exactly which state is currently having the highest per capita income. So suppose, let's take an example, Haryana has the highest per capita income. Okay, so now when you are considering for Bihar, you will say that the per capita income of Bihar, or the difference between the per capita income of Haryana and Bihar, is the weightage that would be assigned to Bihar. Okay, and then this criteria has the maximum weightage. Earlier it was 50% weightage, now it has 45% weightage, but even in both, the finance commission gives the maximum weightage to income distance criteria. Now here, income distance is effectively what it is saying, that the states which are having very high per capita income, the income distance is going to be less, 0. For example, for Haryana, the income distance is 0. The difference between the per capita income of Haryana and Haryana is 0. And the state which are poorer states, for them the income distance would be maximum. So effectively, when we are giving 50% weightage to income distance criteria, we are giving more money to the states which have less income, and the states which have higher income, they will get less money. So effectively, this is promoting equity principle, that the poorer states are getting more money from the center than the richer state. And what do you think? What will be the share in income tax collection? Whether it is the poorer state which will contribute more to income tax, or richer state? Naturally, the richer state. Those person who will have income, they will pay income tax, rather than the people who have less income. The poor people, they will not pay income tax, they will pay GST. I'm not saying that they are not paying, I'm just making a comparison. Even in terms of GST, where the expenditure would be more, I mean where the income is more, there is likely expenditure is also going to be more. So the tax collection are invariably more from the states which have higher income, and the distribution, the states with less income are getting more money. So effectively what we are doing, we are taxing the richer state and giving it to the poorer state. We are trying to make a equity principle, or we are trying to have inclusive development. This is also a topic in economy. So one of the tools of inclusive development is taxation, and another tool is this devolution, devolution of money. Okay. Next is population. Earlier, the population of 1971 census as well as 2011 census were used. Now, this Finance Commission has done away with the 1971 census. Now, it is only using 2011 census. Do you know why this 1971 census was used? It is more logical that we have only the latest census data. Why do we use this 1971 census data? You give your answer. I will move to the next point. Next is that earlier forest cover was used as a principle. Now, in place of forest cover, this new principle has been introduced, or new criteria has been introduced, that is forest and ecology. Similar, like, and the percentage has been increased from 7.5 to 10%. Okay. Now, what is the difference between forest cover and forest and ecology? Because forest and ecology, this will only use the share of dense forest in a state. Earlier, the share of dense forest as well as rare forest was also used. Like this is, we do the classification of dense forest on the basis of canopy density. When canopy density is more than 40%, we call it as a, sorry, more than 70%, we call it as a dense forest. When canopy density is less than 10%, we do not call it a forest. Minimum 10% canopy density is required. Okay, so now this is saying that it is not only important that we have forest, we got to have dense forest as well. So now the weightage of only dense forest, and the name has been given as forest and ecology. Next is demographic performance. Demographic performance is as such inverse of total fertility rate, TFR. What is TFR? TFR is the total number of children that a woman will bear throughout her reproductive life. Okay, so now this is also something that can be asked in prelims. So inverse of TFR means the state which will have more TFR, it means its demographic performance is not good. It is not controlling the population, which is the policy of the country. So in that case, we want to discourage those kind of states, and those states which are doing good work, their performance, we want to reward them. If you are successfully implementing the population control measures. So in case inverse of TFR means the states which have less TFR would be getting more money. So these are the states who are good in implementing population control measures. Now this is a new criteria that has been introduced, and it has been given a weightage of 12.5%. Now why this new criteria has been introduced? Because of the reason why we were using this population of 1971. The reason for using 1971 population was that when in 1970s it was realized that India's population is growing very fast, and this increasing population is not good. Probably we need to control the population. So as a matter of public policy, the central government adopted that we should control population. And when during emergency, you must be knowing that there were various excesses to control the population. In this process, what happened that southern states usually they were quick in implementing population control measures. Their population growth started slowing down, whereas the northern state, especially the states in the plains of Ganga and also the eastern states, they were not implementing the population control measures. So what happened, that population was a criteria. So those states which are implementing the national policy, they would be like getting less and less of the money because their population is not growing. Suppose for sake of the simplicity, we are giving money in proportion of population. So if you double your population, you will get double of your money as well. So those who are implementing national policy controlling the population, they would be penalized. So for that purpose, it was decided that let's fix it at 1971 level. Okay, but this is also not completely true. The states which are like increasing their, I mean, whose population are more now, probably they need more money. So that's why a mix of 1971 and 2011 population was used by various finance commission. Now the mandate of this finance commission was that it will only use 15th finance commission will only use population of 2011. So that's why this finance commission came up with a new criteria of demographic performance, and it has given its 12.5% of weightage. Okay. Next is a new criteria has been introduced, that is tax effort. This is also being accused. This is also known as a Dutch disease. This concept you might have heard. Dutch disease means that those who are having more resources, or it is also known as resource curse. So having more of the resources, and originally this was given in the context of natural resources. So a country with more of the natural resources is going to grow slowly, or rather the more natural resources becomes a curse for the development of this country, and it slows down the development. This is counterintuitive because normal common sense suggests that if we have more natural resources, we should grow. Like Middle East countries, they have got so much of oil, so because of the oil, their economy is booming, they are growing. But it was found for Netherlands that they have also got the discovery of natural gas. Because of the natural gas discovery, what happened, that the whole of the economy became dependent on natural gas. And when for some reason the natural gas production slowed down, they did not have other economic activity to move to. Yeah, I am explaining, Yogesh. So what so happened that when you have more of natural resources or abundant natural resources, you invariably get dependent on that natural resource, and these are obviously not renewable. They are non-renewable. Because of their non-renewable in nature and sometimes technological challenges, sometimes economic changes. For example, those countries which are dependent on coal, now the world is moving away from coal. So even if you have a huge coal resource, you may not be able to use it because the world is moving towards renewable energy. So because of that reason, sometimes it so happens that you have a lot of natural resource, and because of that your economy is dependent on particular natural resource, and as soon as you are not able to exploit that resource, the whole economy goes into slowdown. This is something that has happened in case of Netherlands. This is something that has also happened in case of various South American countries like Venezuela. It was also very much dependent on oil. When for some reason oil industry could not keep on growing, the whole economy went into slowdown or recession. Okay, and this is also said for African countries. The explanation is slightly different for African countries. But for African countries, it is said that because they have a lot of natural resources, these colonial powers colonized Africa for the natural resources. And because of the struggle among colonial powers or the exploitation of the colonial powers, Africa could not grow. So when external people will reach looking for those resources, they will exploit the resources, they will exploit the local people and local economy, and you are not going to grow. And the same is said for India's mineral rich states like Chhattisgarh, Odisha, Jharkhand. They are also not growing because of a lot of, like, they have also got something called Dutch disease or resource curse. Extending the similar logic to the devolution of fund by the central government. The states which are getting more and more of the money, they should have grown by now. They should have become developed because center is giving a lot of money. But it has been seen that these are the states which are not growing. These are the states which are continuously poor state. Their economic growth rate is slow, and the state which are not getting money from the center, they are generating their own resources, they are making tax effort, and because of that effort made by these states, they are able to grow. So this, like it is said that when you are doling money to someone, when you are giving something for free to that person, he does not learn to earn money, and because of this reason he remains in perpetual poverty. The same is the logic being extended for the states also, that when the states that are getting more money from the center, they are not learning to earn their own money, and rather they are remaining in perpetual poverty. Okay, so now to counter this understanding, this element of although their weightage is very less, 2.5% only, an element of tax effort has been introduced, that this is in proportion to the tax collection as percentage of GDP. Tax collection as percentage of a state GDP. Obviously, the state which has higher GDP will have higher tax collection, but as percentage of their state GDP, whatever, if your tax collection as percentage of your GDP is more, you will be rewarded for that. So in a way, Finance Commission is giving a message that you should try to mobilize your own resources rather than being dependent on the central government funding. Is it clear? All the criteria, all the changes, the rationale behind the changes, everything must be crystal clear. If you have doubt in anything that is there on the board, you must ask. Yogesh, have you understood the Dutch disease phenomena? Okay, now we shall move to next item. This is very much important. All these numbers, etc., you must remember. These share 45, 15, 15, 10, 20, 12.5, 2.5. All these numbers are necessary to be memorized. Now, there is another element, the Finance Commission. Not only, this is something like, this is a matter of right kind of thing, that the states must get this much of money from the share, center's share. But not all states are able to complete all their needs using this devolution as well. So the Finance Commission also provides some kind of grants to the states. What are those? First is called revenue deficient grants. So like the devolution that is done, that devolution is not sufficient enough to meet the revenue expenditure of the states. So, to meet the revenue expenditure, like 17 states, as per the projections of the Finance Commission, 17 states would not be able to meet their revenue expenditure. So, for that, those 17 states, Finance Commission recommends revenue deficient grants. Okay, the purpose is to fulfill the revenue deficit. I hope you understand the what is called revenue deficit. There is capital deficit and revenue deficit. In economy, we study in budget chapter. So that revenue deficit is not able to be fulfilled by the devolution. So to bridge that gap, for 17 states, revenue deficient grant is proposed. Next is for some particular sectors, some sector specific grant, because these are the sectors which are, as the matter of national policy, these are important. They have been declared important by the central government. So to implement various measures in these sectors like health, school education, higher education, agriculture reform, maintenance of Prime Minister Gram Sadak Yojana, judiciary, statistics, so these aspirational districts, so to these expenditure or these grant can only be spent for these particular purposes. Whereas the devolution that has happened using that formula that we have just studied, that money is at the discretion of the state government how it want to use. That is an untied fund. Tied fund and untied fund, these are the two terms. These funds, these grants are tied. Tied means that if you have got 100 rupees for health, you can spend it only for health. So they are tied to health, tied to a school education. Whereas the money that they have got through devolution is free money or untied money. It is up to the wisdom of the state government how they want to spend. If they think that it is necessary, uh, that we have to spend in health, they will spend in health. If they want to spend it in doing party, they can do party. Okay. Saisri has a doubt that, sir, what is meant by deficit? Deficit in Hindi is called ghata, loss. Okay. So, like there is term revenue expenditure and revenue receipt. Receipt is simply income, expenditure is expenditure. So suppose your expenditure is more than your income, it means you will incur losses. The losses are called deficit. So whatever be the gap between revenue expenditure and revenue receipt is called revenue deficit. Okay, like just take an example. Suppose the government is spending 1000 crore rupees, where it is only earning 900 crore rupees. So its revenue deficit is going to be 100 crore. Now, this 100 crore, like since the Finance Commission is saying that central government should give this 100 crore rupees to a particular state whose revenue deficit is expected to be of 100 crore. Is it clear now, Saisri? Next is a state specific grant. So like certain states have also been given some state specific, like this is the sector specific grant, all the states will get this. Whereas this state specific grant, not all state will get. Okay, like for preservation of culture and historical monuments. So depending upon the which state have this need, those state will only get them. Okay, so like Finance Commission recommends, does all the calculation that what is the amount of expenditure that these states are expected, what is the amount that they should get, and all those things. And numbers are prescribed by Finance Commission. We do not need to mug up those numbers. We need to just understand that there is a state specific grants and they are for purpose of social needs, for preservation of culture, administrative governance, and so on. Just memorize 2 or 3 items from here, 2 or 3 items from here. That's enough. Okay, these are the key terms that you should remember: state specific grant, sector specific grant. Next is local body grants. Now this is something, if a question comes on local bodies, then also you will have to answer it. So not only in this chapter, the next topic that we have is local self government. There also these recommendation would be useful. So first thing is, in case of local bodies, we have two kind of local bodies: urban local bodies, rural local bodies. So like earlier Finance Commission have recommended 30:70 ratio. Like 30% should be given to urban local bodies and 70% to rural local bodies. This was basically based on the population share. Like in urban India, 30% of the population lives. Rural India, 70% of the population lives. So accordingly, the distribution should be done. Now, as per the latest projections that we are doing, it is expected that the share of urban population has increased. So now the new ratio is 35 is to 65. Okay, so urban local bodies will receive 30%, rural local bodies will receive 65%. This is a slight approximation that I have done. Actually, it is 34 point something something. You need not memorize to those decimal points. 35 is to 65 is fair enough. And see, in a lot of coaching institutes material, I have seen the number is written as 40 is to 60. So actually, this is an error done by one of the newspaper in one of the articles, and then from there the error has been copied to various online institutions. Okay, but I have actually done this calculation from the numbers mentioned on PIB, because PIB websites does not mention the percentage or ratio. It mentions the actual amount, that this much amount will go to the rural bodies, this much amount will go to urban local bodies, rural local bodies and urban local. It is not possible for us to memorize those numbers. They are difficult. These ratios we can remember. So I have calculated the ratio of them. It is coming roughly around 35 to 65. Okay, this is something that you can remember. Then one beautiful things that this Finance Commission said, that these grant would be conditional to, you may write it down, would be conditional to, or this is also termed as performance grant. And they would be conditional to urban local bodies reforms. So a part of this grant was called performance grant, and which was linked to urban local bodies reforms. So those states which will do the urban local body reforms, only those states will get these grants. If a state does not do this urban local body reforms, that state will not get these grants. And what were those reforms? That you should write down. There were three reforms that were recommended by the Finance Commission. First is publishing audited accounts in the public domain. What were those reforms? First is publishing audited account. I will not teach these things when I shall be teaching again the urban local bodies. I will simply refer to these things that I am teaching here. So the Finance Commission said that this performance grant would be given only if a state implements urban local body reforms. And what were those reforms? The first is that publishing audited account. So all the urban local bodies would have to first get their account audited. You will have to get it audited, and after auditing they would have to publish it in public domain, that yes, this is how our accounts, this was our income, this is expenditure, on what matter we have done, how much of expenditure. Okay, You must be knowing that CAG does not conduct audit of all the local bodies. CAG only conducts audit of a local body if it is requested by the state government. Otherwise, local bodies can have their own auditor, or the state government can appoint an auditor to audit the accounts of local bodies. So, first thing is that they should get their account audited and publish their audited account. Second is that minimum flow rates minimum flow rate for property tax collection minimum flow rate for property tax collection must be fixed by the state government. So, a state government must fix the minimum floor rate for property tax collection for all its urban areas. So, like property tax is the major source of income for the urban local bodies, and most of the urban local bodies are not using it efficiently. So that's why, and the reason is that the floor rate is the minimum rate of taxation of the property tax. So, and like it is usually a property is taxed on the basis of the carpet area that is happening, and it varies from locality to locality, the cost of property, there are other criteria as well. So, a state government must declare what is the minimum floor rate for property tax collection. Okay. And third is that a state government must constitute a state finance commission. A state government must constitute a state finance commission and act on its recommendation. In the bottom, what I have written is a state government must constitute a state finance commission. So, what a state finance commission does? A state finance commission decides the same thing which is happening between center and state has to happen between a state and the local bodies, like how much of the state tax collection would go to the local bodies, how it would be distributed among various local bodies, and then what is yes, so that for that purpose a state finance commission has to be constituted. It will give its recommendation and those recommendations should be implemented. Okay, there are some small amount of nitty-gritty involves, uh, like see, this was something which was applicable after 2024. Others were applicable before 2024 also, but we need not go into those details. We need to simplify things and remember in simple manner that these were the three conditions if a particular state is full, because we are already crossing 2024. Okay, so for us now it's simple. These are the three conditions. If they are implemented by a state, they will get performance grant, otherwise they will not get performance grants. In urban local body chapter, we shall also see that these are the recommendations by the finance commission. These are the reforms which are recommended by reforms commission that must be implemented by all the states. Okay, so we are also preparing some points for local bodies chapter. Is it clear? Achha, one more thing, would you like to answer, like in case of rural bodies we have three tier structure. So which tier gets the money? Is it the Jila Parishad? Is it Panchayat Samiti or the Gram Panchayat, or all three equally? panchayat, taluka, district. They are the three-tier structure. So actually, it is the panchayat which gets 85%, taluka gets 10%, and district level gets 5%. So all three gets, but majority of the money goes to the lowest level, that is the panchayat level. Because see, the local bodies have been constituted with the spirit of decentralization. Decentralization means the power should be there at the ground level, at the village level, at the grassroots people. So the lowest level must get the maximum money to be spent by the local bodies. Okay. Now, that's all that we shall see for Finance Commission. But there is one recent trend that has been noticed. Now, this is also as per one specific question will not be asked, but this is something that you must be writing for in your answers. See, when 14th Finance Commission had come, it has recommended that from 30% the share of state should increase to 42%. From 32 to 42% it has recommended. You can see that there was a jump in a state share in the divisible pool. Divisible pool is the taxes which are shared. Okay, this is called divisible pool. We have said na, that some taxes are not shared. Okay. So as you can see that initially the government accepted the recommendation of Finance Commission and the share of states increased. But then later on it has been noticed that the share of states have come down. Okay. Now in fact state share in gross tax revenue, if you see, it has continuously come down only. It has further come down. Why? So, and in fact, effectively, what you are saying that 41% or 41% of center's tax is to be shared by a state, but effectively they are only getting 32%, which they were supposed to get under previous Finance Commission. What is happening? What is happening is that you can see that the share of cess and surcharges, which were earlier around 11%, have now increased to 15%. And as I have told you earlier, that the cess and surcharges are not shared with the states. So what central government is simply doing is it is increasing the share of cess and surcharges. If it has to impose certain taxes, if it wants to increase the tax rate, rather than increasing the tax rate, what it does it has a surcharge. It imposes a cess. Okay, like see, I have always wondered this. If you want to take extra money, the government needs extra money. It can simply increase the income tax from 30% to 33%. What is the purpose of having a cess of 3% rather than having an income tax rate of 33%? You can have another slab and say that it is 33%. But if you have a slab, it can have negative publicity. And also, since cess and surcharges are not shared with the state government, that's why government is recent time preferring this route for going for more of cess and surcharge. So this is another argument that you can write. The central government is using more of cess and surcharge to increase its revenue, and it is harming the interest of the states. States are not getting the 41% of the center divisible pool, rather they are only getting around 32%. Is it clear? Next is related to the financial matter. There has been another improvement in the recent time, that is GST Council. Now this GST is also something which is a relatively old item, so its utility is limited to giving one example here and there. Okay, so that's why we are not going to study GST in much more detail until unless government brings about any change. A specific question is not expected on GST. Okay, because the UPSC has already asked questions in the past, nothing new has happened, but we must understand how GST Council functions so that we could give example of GST Council at various places. But one thing we have already studied in the last class, please give me an answer. Who, which, whether states or parliament is empowered to impose GST? Like who imposes income tax? It is parliament. Who imposes VAT? It is the state. So in case of GST, goods and services tax, which of the two legislatures is empowered? Both. Yes, you are right. So both parliament and state legislature are empowered to impose GST. There is CGST and there is SGST. Yes. So CGST are imposed by parliament and SGST is imposed by a state legislature. Okay. And GST Council, both of them, whatever the tax that they impose on the recommendation of GST Council only. And GST Council is one body which recommends rate of taxation for the whole of India. Okay. Now, this is a body which has representation from both union as well as union government as well as a state government. So, first thing first is it has representation from union government as well as a state government, which is a good thing that both union and state are coming together and they are deciding on any particular matter. In fact, but this is chaired by union finance minister and all the states have their finance ministers over here. Okay, and the two states which have their legislature, they also send their finance ministers. So all the states have their ministers and then two union territories. Now this has become three union territories, but till now since Jammu and Kashmir did not have any ministers, so only two union territories were there. This is a relatively old image that I have got. Okay, so now Jammu and Kashmir will have their own government. Their minister would also be a member of GST Council. Okay, this state will go down to 28. And in union government, one is union finance minister. Apart from that, there are other two union ministers are also member of GST Council. Chairman is ex officio. Union finance minister is chairman. So whoever is the union finance minister, he or she is going to be the chairman of GST Council. Apart from that, one of the members on rotation, I mean among these states and union territories, one of the members will become the vice chairperson. So this is the composition of GST Council. So simple, all the finance ministers in our country are going to be the member of GST Council. Naturally, the union finance minister is senior to all the finance minister, so he is going to chair the GST Council. Since chairperson is from union government, vice chairperson is from one of the state government, and from union government there are other two union ministers also in this council. It's as simple as that. Now suppose a decision is to be taken, whether a decision is going to be taken by majority or a special majority. So here the provision has been made that any decision would only be taken by 3/4 majority. Very good. I mean, it should not happen that see 49% of the states are opposing certain decision and you have taken a decision. It should happen. I mean, 3/4 majority is there. It means there is a broader consensus. Now see all these, see 33 or 34 members, one chairperson is also there. So all these 34 members do not have equal voting power. The voting power have been decide that see there are representative from union and there are representative from states. So all these union representative put together, their voting share is equal to 1/3, and all these states put together, their voting share is equal to 2/3. So suppose I simply say that 1/3 of the voting power is going to union altogether, whatever be the decision of union members. Obviously, even in finance minister and all the other two members, they will have the same stand, whatever be their stand. So put together, their weightage, their vote weightage would be 1/3, okay, of the total vote weightage. And all these 28 plus 2, 30 members, their vote put together would have the weightage of 2/3 or 66%. Okay. Now, for any resolution to be passed, any decision to be made, 75% vote must fall in its favor. So, neither all states put together can pass any resolution in GST council. In a sense, you can say that union has got a veto power. If all states are together saying that we should not tax, say, alcohol, or either if all states are collectively saying, although they are not saying that we should not tax alcohol, let's say they are saying it, then also they cannot pass any resolution until unless union government also agrees to it. But obviously, if union government wants to do something, it cannot do it until unless states also support this decision, because union government only have 1/3 weightage. So for any taxation reform to take place through GST Council, broader consensus has to be reached. Both union and state must agree on that reform. Then only the reform can be implemented. Is it clear? So that's why this is also an example. In the next class, I will teach you. This is an example of cooperative federalism where center and state are cooperating. In next class, I will teach you in detail what is cooperative federalism and all that. I am just here giving a passing reference. Because center and state has to come together, they have to cooperate with each other for any decision to be taken with respect to GST. Clear? After this, we shall move to next topic, that is demand for a special category status. This is something that has been in news in recent time. I was expecting a question this year itself, but this year UPSC decided not to ask. But since this demand is an evergreen demand, the question remains a possibility even for the 2025. So both these government, like one is the chief minister of Bihar, another is the chief minister of Andhra Pradesh. They want that their state should get a special category status. Okay, who will give this a special category status? The Prime Minister Narendra Modi. So now, the first thing first, it's like the jury is divided whether they should get the special category status or not get the special category status. We as a student of polity, or we as a rational being, we should look into the criteria. What are the criteria that are used for giving a special category status, and if a particular state satisfies those criteria, give a status. If these state also satisfy, give a status to them also. If they do not satisfy the criteria, do not give the status. That's simple, rational approach. So let's first understand what is the criteria which is used for a special category status. Now, I would give you a hint before giving you the criteria. I would simply tell you that which are the states that have got a special category status. Now, these are all the northeastern states and Himachal Pradesh, Uttarakhand. Okay. So, effectively, the criteria is what Yogesh is suggesting, that there has to be a difficult and hilly terrain. Now the question must come to you that what is this difficult terrain has to do with the special category status. Suppose a particular state is having a lot of mountains, etc. What's so special about it? I mean, it's good, no? People want to live there. There is a lot of tourism. We want to visit there. Not Maharashtra, Yogesh. Maharashtra has not got a special category status. What does hilly and difficult terrain has to do with a special category status? So see, the logic of a special category status, a special category status is something which was first proposed by the planning commission. And planning commission, when it used to be a very powerful body, it used to decide of the grants that would come from the Center for Planning and Development, and it felt that these states are not on par with other states when it comes to development because of their hilly terrain. So suppose if you have to travel 100 kilometer in a plane, probably you will have a very good highway, and you can travel this 100 kilometer in say 1 hour or 1 hour 15 minutes, at max 1 hour 30 minutes, depending upon your driving capability. If you have expressway, wow, 1 hour 30 minutes. And then even if you decide to make a highway or expressway in a hilly area, you cannot drive it in 1 hour or 1 hour 15 minutes. It will take you at least twice or even thrice the amount of time, even if you have the highway, etc. The first thing is this. Second thing is that to make a highway in hilly terrain is itself a much more time and cost consuming exercise, and even much more environmentally damaging, and probably many of the times technologically challenging as well, sometimes not possible as well in these hilly estates because of their terrain. See, when I was in Nabad, I used to work in Simla, and they were constructing a highway from Chandigarh to Simla. I worked in Nabad for 3 years, and only in these 3 years' time, only half of the highway could be completed between Chandigarh and Simla. You can see the pace of the work that was there. And in the 5 year time, complete Eastern Purvanchal Expressway was constructed by the UP government. So in the plain area, it is relatively easy to do the construction as compared to, I mean, cost involved is also much more. Okay. So that's the reason, because development, to do the development is much more costly, time consuming and difficult. That's why hilly and difficult terrain is one of the criteria. Next is low population density or sizable share of tribal population. So population, if tribal population is there, it means there is need for development is more. And also you can say that if population density is low, the population share is not there. I mean, demography is also a resource. So that resource is not there. Either that resource is not there because of the low population density, and if it is tribal resource, that resource is not properly trained. That resource is not converted into a human resource. Okay. Next is a strategic location along the borders with neighboring countries. If we have a strategic location, it is important for us to do the development in the national interest. And if economically and infrastructure backwardness is there, if a state is not having economic and infrastructure, so for having this equity criteria to maintain inclusive development, we should invest or we should help that state. So this is also a criteria. And the last is non-viable nature of a state finances. Like a state uh, is not able to generate enough money for whatever reason to have their own capital expenditure or to have their own source of income. So if a state are not able to make their own source of income, they should be helped by the center through more funding. So the whole purpose of a special category status is to get funding. or rather I will tell you what are the different advantages why people are fighting for this special category of status, not for the more funding from the state. Now when you weigh in for say Andhra Pradesh and Bihar, their logic rests on the last 2 points. Bihar is arguing that economic and infrastructurally Bihar is a backward state. Fact. The per capita income is least in case of Bihar. Okay. And since there is not, after the bifurcation of the state, like Bihar is divided between Bihar and Jharkhand, all the mineral resources, etc., the industries which were there, they have shifted to Jharkhand. So now Bihar is only left with the agricultural land that is also marred by flood and drought. Every year we will have flood in the North Bihar and drought in the South Bihar. Bihar is one peculiar state which suffers with both these natural calamity. Okay, so because of that reason, the state finances are non-viable as well. I mean, those states which have industry, etc., they are able to generate resources. So these are the two arguments given by Bihar. The Andhra Pradesh is also giving the same argument that since our economic center was Hyderabad, the joint state of Andhra Pradesh and Telangana, the economic activity were mostly concentrated in Hyderabad. Now that Hyderabad has gone to Telangana, their state finances have become non-viable in nature. The rest of the Simandra is not having much of economic activity, or the infrastructurally it is backward. Okay, but obviously the first three criteria, neither the strategic location nor the population density nor the hilly and difficult terrain, are not satisfied by these two states. So that's why probably the state government is not willing to provide a special category status to these states. Now we shall understand their argument why they want a special category a status in the first place. So normally the common sense suggests that they will get more money, but it's more than money. Okay, like the first thing is that this state will get 90% share from the central government for centrally sponsored scheme. Any central sponsored scheme means a part of the funding is given by the central government, a part of the funding has to be given by a state. In case of a special category status state, they only have to give 10% share, whereas for other states, they have to give 30 to 40% share. So here comes the advantage. Next is, even this is another problem that happens, like this is a concept of march loot is there. If you or your father have ever worked in the government sector, or most likely when you become IS you will experience this, that a lot of funding that comes to your department is going to lapse if you do not spend the money. Suppose like 100 crore was given to your district when you are district magistrate. If you have spent 100 crore, you have spent it. Suppose you were able to spend only 80 crore rupees and the financial year came to an end, like 31st March. Then the rest 20 crore you will never get. Next year, probably your budget would also be reduced. Since you were able to spend only 80 crore, next year you will only get 85 crore rather than getting 100 crore or 105 crore. So because of this reason, what happens that people tend to spend in the month of March a lot. So many a times it used to happen in award, we used to see like a state government department, what they used to do, that in the month of say till January, their expenditure would be roughly around 33% of the total annual target. We would run after them that you are not doing I mean, I was working in RIDF department. So we used to give loan to the state government. We used to run after them that you are not implementing the projects expeditiously. You must, I mean, expedite the work and all those things. And come February and March, their speed would increase like anything. They will exhaust the rest of the budget in these 2 months only. Okay, so because they are afraid that the budget would lapse. Now, in case of the special category status states, this lapsing does not happen. They are, I mean, lapsing with respect to the grant given by center. So even if they are not able to use it in this year, they can use it in subsequent year. Next is they get benefit in terms of excise and custom duties, income tax and corporate tax also. This is something which is being targeted by Chandrababu Naidu. What Chandrababu Naidu says that, or rather wants that, if his state Andhra Pradesh get income tax concession or excise and custom duty concession, he can set up a new developmental center like Hyderabad. And a lot of companies, to save their corporate tax, to save the custom duty, etc., they might want to relocate from Hyderabad to Vijayawada or Amravati. This is something which would be helpful for attracting investment in particular state, or even like Bihar chief minister also wants this so that he could set up some industrial center in Bihar and industrial activity could be started in Bihar. The real reason, obviously these are also benefits, but this is the real benefit that they are looking at. Then it was the case 30% of total central assistance goes to a special category states. Okay. Now, if we look at this from a critical perspective, I mean, if we have to counter why you need a special category status, this first thing first, this central 30% of total central assistance, this was the scenario when planning commission was there. And when finance commission was also, I mean, when planning commission came up with this criteria of special category status, finance commission finance commission also used to give weightage to a special category status. So one of the criteria that various we have seen, one criteria or the basis of grant used to be a special category status as well. Now finance commission, we have just seen, have completely done away with a special category status. So since planning commission is no more there, finance commission is not using a special category status as a criteria. So probably this does not hold true anymore. That 30% of the central assistance will go to a special category status. This was something that was true when planning commission was there. Okay, planning commission has made this rule that 30% of total planning expenditure will go to a special category status states. Okay. The second thing is that these are also like the concession in income tax, custom duty, etc. They are also transient in nature. Transient in nature means they are given for a particular period of time, say 4 year, 5 year or so. These are no solution to the especially Bihar's problem. Bihar as a state is not able to attract investment, not because there is higher taxation or custom etc. Rather because of the other issues like lack of the raw material, lack of the market, lack of law and order things. Those are the problems which are not going to be solved by this transient or temporary tax break that you can get. Okay. Obviously, these benefits will remain there. But these are like monetary benefits, and these monetary benefit can also be given by the center with in terms of economic package. Okay. Why they don't go for SEZ? See, SEZs you can have like no custom duty. Okay, but income tax or corporate tax have to be paid even if you are in SEZ. No running away from income tax and corporate tax. What are the other problems? First is that it will increase the financial burden on the state. Sorry, on center. Like more states are given. Second is again this Dutch disease. There would be dependency on the centers and reduce the accountability. You can mention about the resource curse. We can mention this resource curve point separately as well, that it's not that those states who have got special category status, they have got a lot of development. Okay, and then it will also lead to inequitable distribution of resources. Like if fewer states will get, like a state of Bihar and Andhra Pradesh, they will get more money from the center on expense of other state. If Bihar and Andhra are getting more money, someone else will get less money. And then the others will also raise their own demand that they should also get. Another state, maybe UP, will come up with their own set of argument. Rajasthan will say that we are also having a lot of desert land, we are also sharing border, at least they also fulfill two criteria. They will also say that our finances are also not viable. Okay, so and then politically also it is a unviable thing. Political opposition shall always be there. So because of these reasons, you can say that these are the problems because of which the central government have not accepted their demand for a special category a status. Rather, central government is central government is have given some special packages in this year budget. Some special economic package has been given to both the states. Like this year's budget was all about Bihar and Andhra Pradesh. This is also something that people were saying. So, a special economic package was given to these states. The demand for a special category status have not been met. Okay. Then what will be your suggestion? After writing all the arguments, you can give the way forward. Let's see. We have to reduce the dependency of states on center. We should give more of a, we should devolve more fund, devolve more funds to states. Give them untied fund so that, or rather allow them to generate their own resources so that they are not dependent on central government. Okay, we should allow the finance commission to look after the demands of these states who are demanding for a special category status. Okay, so we should use the finance commission grants for meeting the special needs of these states if they have any. So what's the benefit? Finance commission is an apolitical body. Apolitical body means when central government gives money, like through budget, people are saying that the central government has given more money to Bihar and Andhra Pradesh because like the government is dependent on their support. But when finance commission will recommend, it would recommend on rational criteria. That yes, these are the criteria, these are the development need, income distance, or whatever be the criteria because of which it is given. So it would be apolitical in nature, it would be more on need basis, rational basis. Okay. And center should focus on addressing the real and specific needs of the state rather than declaring a special category a status. So we should also not support, and this is also the recommendation of Raghuram Rajan committee. Raghuram Rajan committee, I will tell about this. But before that, I would rather support that we should not support the demand for a special category status, because this is the stand taken by the central government as of now, and there is no logical flaw in the stand taken by central government. So we should know what the reason being given by the states, why they are asking for a special category status, what is the advantage that they are going to take, and what is the problem that is going to be created if it is accepted, and then we should negate the demand and rather give suggestion that if not that, what should be done. Then the Raghuram Rajan committee has recommended an alternative funding model. This is the last thing that we are going to cover in today's class. Alternating, or rather alternative funding model. This is something that have been suggested by Raghuram Rajan committee. This funding model is saying that we should have two criteria. First is developmental need and developmental performance of states. See, as of now, Finance Commission is only considering developmental need, income distance. But Raghuram Rajan is saying that not only need, but also the performance should be considered. Suppose you are simply looking at how many people are poor. You should also look at how many people have been taken out of poverty. So it will create incentive for performance. Otherwise, you remain poor, you keep on getting money. So poor has no incentive to become rich. Like poorer state have, I mean, if they become rich, they will lose the money. It's like the people are claiming to be the more backward class. So that's why it is saying that development need and development performance of a state should be the criteria. Then we should have a multi-dimensional index of states. Okay, so rather than using only income distance as a major criteria and population, etc., we should have the multi-dimensional developmental criteria, which will have items like health, education, poverty ratio, and obviously income, etc. So there would be multiple dimensions related to development that should be used for devolution of fund or funding to the states. So this is one suggestion that you can give, which was given by Raghuram Rajan committee. Okay, so if you complete your answer by a recommendation of any committee, and this is not something which is known by everyone, I mean this is written by everyone, your answer will definitely stand exceptional as compared to others' answer. Okay. So that's all that we are going to cover in today's class. If you have any doubt, you may ask now, or you can mention it in the comment section. Do tell me in the comment section whether you like this class or not. If you want any other thing, any change, any improvement, anything else, you can go for it. You must write in the comment section. If you like it, you must mention it as well and press the like button as well. In tomorrow's class, we are going to cover the cooperative, competitive and combative federalism, asymmetric federalism, the issue that is there between the Delhi government and the Lieutenant Governor. That these are the items that we are going to cover. There are some other the recent changes that has happened with respect to All India Services rules. These are the things that we are going to cover in the tomorrow's class, and tomorrow we are going to complete the chapter of federalism. Okay, so see you tomorrow, 2 p.m. Have a nice day.